Is Bitcoin about to have an absolutely massive rally once again following sideways consolidation after big moves? It seems like it's a repeat cycle that just keeps playing out. On today's show, I'm going to cover that as well as if there will be a pullback and which levels you need to look out for. And then most importantly, we're going to focus on a couple of the altcoins because you can see from the crypto bubbles chart over here, the altcoins are starting to pop massively. And I think that it's that typical cycle experience that we mostly go through in the bull runs, which is Bitcoin runs first, then Ethereum has a bigger run, and then that flows into the medium cap altcoins and then the low caps. So maybe it's already time to start positioning yourself for that. I know a lot of people out there don't trust this rally and believe that it could be a trap. I plan on addressing that in today's show as well. So without further ado, let's get straight into it. And I want to start off over here with this chart. And it is what I call the triple resistance that is coming up over here. It's on the weekly. And essentially, I have the 50 moving average, which is the white one coming down over here. And then we have the 200 moving average. And we all know the 200 moving average is the important one. That is the super, super important one for gathering whether a market is in a healthy uptrend or if it's in a dangerous long-term downtrend. So as you can see, the purple moving average is currently coming in at 24,700. The white one is coming in at 25,600. That is the 50. And then you have the strong horizontal area of resistance, which is coming in based off of the May wick low that we had for Bitcoin. And that's coming in at 25,383. All three of those are about to meet up during the course of this week. Possibly next week is when you would expect these to start to cross to the downside. And for those of you who have followed me for quite some time, you'll know that I've said that when you look at this price action or when you look at moving averages, it works like a magnet. Right as they're about to cross is typically where price will rally straight into that cross. And then the next big question is, do we break through that level? Or is that going to be a strong resistance zone that's going to lead to a major rejection? Or will it just be a small pullback that gives you an opportunity to get into the market and then it carries on higher? Well, hopefully it's going to be the latter. Hopefully it pushes into that zone, pulls back and gives the market a healthy correction. And I say that with a lot of emphasis, a healthy correction. We need price to still pull back slightly so that the spot can basically drive the market up as opposed to leverage rallying price aggressively into a parabolic uptrend, which always ends badly. Parabolas usually, when they do break down, usually have a drawdown from the breakdown point to the low of in the region of 80%, which is not what we want to see, right? That means that you're basically going to retrace the entire move, possibly even go lower than that. So therefore, you want to see that this area over here does reject for a small pullback. Bulls can then regather steam, and then on the second attempt, you can break through those major levels of resistance. But I'll cover the scenarios as well if in case that doesn't happen, in case the bulls are super aggressive, what you can potentially do next. And should that take place, what would this look like? I want to focus on the number also 28,000 to 30,000. You'll see why in a moment's time I want to focus on that number. And I just want to give you some perspective. Let's look at this and say, well, this is the range, right? This is the main range that Bitcoin's caught within to create an accumulation phase over the course of this year. Then keep that into consideration. Say this bottom area over here was a deviation. And let's say we do something similar where there is a major relief rally. If you look at that, an equal deviation similar to what we saw over here would have price already come up to in the region of 28 to 30,000. I want you to just keep that visual in mind for what I'll show you next, because there is a possibility that you could see something like that take place. And then at a later stage for price to continue to break back into the range. And then there could actually still be a slow bleed down to create a proper accumulation base, which I don't believe that we've seen. But the market doesn't need to do what you want it to do or what I want it to do. It doesn't have to do what you believe it's going to do. This is what trading is all about, is adapting and sticking in line with the trend. When the market starts to shift, sentiment shifts, momentum shifts, then you need to position yourself and start to shift with the ebbs and flows of the market so that you can obviously ride the wave and hopefully make some good money. And one indicator that called it very well is Renko on the daily chart. Renko is one of the candlestick techniques over here. You'll only be able to get it if you have a pro version on TradingView. But the important part that I wanted to outline, yes, we've had many times where it's flipped green and it turned out to be a big bull trap and flipped green and came back down. But the difference is this time over here, we have broken structure in the same way that we broke the weekly structure. The Renko has broken that. And that's basically telling you that any pullbacks that happen from here on onwards, you should be looking to bid those up and play the upside. Now, important levels, again, that number continues to stick out. I have Bitcoin over here on the 3-month chart, so the quarterly chart. The key level towards the lower end side was 13,880. That is for Bitcoin. But as you can see, the quarterly and the yearly opened with a full bull green candle straight to the upside. The next area of interest that lines up is going to be all these wick lows, which is also the the candle close for 2020, as well as the candle open for 2021. That is a highly pivotal level. That level is coming in again at 28,992. These are probably the major upside targets for where this relief rally could end. And if you take a fib level from the market low all the way to the absolute all-time high, that lines up as well with the 0.618 at the same price level as the key quarterly. So those are key levels that you need to focus on. That's an important zone to keep into consideration. And don't be surprised if price ends up rallying that high. It is definitely within the realm of possibility. And I know this is where anything above 25 to 28 is most likely where the psychological barrier of those who are sidelined starts to kick in hardest. Extreme FOMO sets in. And I believe that this 3-month candle will most likely be setting in the wick phase. So you have the wick phase over here, you have the wick phase over here. This is probably going to be left behind as a wick, which means that it's an opportunity for a short-term or a swing trade position and not necessarily a long-term investment. Now, comparing what I just said with Ethereum, you had the low levels of Ethereum, key quarterly levels, key yearly levels as well at $743 on the downside. And then the 618, which also lines up, same thing with the 2021 close, as well as the April 2021 open coming in at, let me just zoom this in, this is 1,917. Let's just quickly move that up. Give me 1 second so you guys can screenshot it. Let's just shift this to the center. There we go. Okay, that is your key level for Ethereum at least. $1,917. That lines up with the 0.618, also taken from the low to the ultimate high. So expect that is completely in the realm of possibility that those levels could be hit from current price action up. That still means another 17% potential move to the upside. So those are targets that I have in mind. And you can see the bullish narrative is starting to switch. If you look at crypto Twitter over here, you have Game of Trades, and he says Bitcoin 6 on-chain metrics calling for a generational long-term buying opportunity, and he gives a thread. So let's quickly go through some of this. I've always mentioned that look at on-chain metrics. If there is a level of confluence with what you're seeing in the technicals, then it is worth listening to. He says Bitcoin has just witnessed the largest 24-hour short liquidation since August 2021. Is this the start of something big? Let's take a look at the on-chain data. And there you have it, massive, massive spikes within the shorts getting liquidated. He says in this thread, I'm going to cover 6 on-chain metrics. There's accumulation trend score. There's the entity adjusted dormancy flow. There's the reserve risk. There's the realized price. And then there's the MVRVZ score and the Poel multiple. David Poel created the Poel multiple. He's a very, very good on-chain analyst. So first, accumulation trend score shows how a combination of the size of entities with respect to the number of new coins they have added or sold, the values closer to 1, i.e. darker colors represent deep accumulation zones taking place. And here you can look at the different colors over here. So very, very similar to what we saw in 2018, and then as well as 2020 with the bottoms. And then here we are in 2023. So that's the current graphic that has been created. But you do want to always take these things with a pinch of salt. You want Confluence to look at other metrics, because I can make the same argument with the color bands that he's showing over here. We had that same color that printed pretty much near the all-time highs, and we also had that same color over here. So let's see if the next one's more compelling. Bitcoin entity adjusted dormancy flow is the ratio of the current market capitalization and the annualized dormancy value. The lower the value, the longer the coins are held by the investors. Dormancy flow came down to its lowest level ever seen, indicating that the speculative hands have been washed out, and only the strong hodlers, aka or holders, aka the hodlers, are remaining. So that is the lowest level that's ever been seen. Similar to using an RSI, still not completely sold on this yet, because these things can remain low for long periods of time while price continues to tank. So let's go on to the next one. Bitcoin reserve risk is used to assess the confidence of long-term hodlers relative to the price of Bitcoin. Low values indicate high confidence and low prices. Reserve risk is at levels never seen before in Bitcoin's entire history. Conviction amongst long-term Bitcoin hodlers doesn't get better than this. I would say the long-term hodlers were caught by such surprise that they had no chance to sell, and therefore they had experienced such drawdown that they had no choice but to hold. That's my personal opinion. So I don't necessarily think that that is a case to go long just because of something like that. Bitcoin realized price is the average cost basis at which all the Bitcoins were purchased. This is something that's usually more interesting. When the current price is below the average price, it has marked generational buying opportunities. Bitcoin is currently hovering around its realized price, making yet another exceptional buying opportunity. So this works in a very similar fashion to something like the 200 moving average on a weekly chart. Typically, price stuck below has resulted in great buying opportunities, but incredibly risky, because you don't know if it's going to start to use that as a resistance and start to reject off of that, going even lower. So only in hindsight, once you reclaim that level, could you say that that is a great buying opportunity. And it's very, very similar. Looking at the 7-day moving average, you want to see that you have recaptured that moving average, and then you start to create a healthy market environment, which is currently where we right are now, which lines up with the break of high time frame structure on the weekly chart, as well as all other time frames below that, which is typically a good thing. So Bitcoin MVRV Z-score shows how many standard deviations the market value of Bitcoin differs from its realized profit. When this metric exists, the green zone, in the green zone, it has historically marked the end of the bear market. And here you can see it did go into the green zone. So he says it's currently attempting to break out of that zone once again, so break out to the upside. But it's important to be cautious, as this metric has faked out people before, for example, in August of 2020. Okay, Bitcoin Powell multiple looks at the market cycles through a mining profitability. And then he says here, the lower the value, the more miner stress is present in the system from a profit standpoint. This helps wash away over leverage and unhealthy miners from the ecosystem. And the Powell multiple has just moved out of the green zone. This has historically marked the end of peak miner stress and has also been a key indicator for solid gains. And I agree with this one as well. So the Powell multiple is essentially showing that miners are gaining back confidence and ready to kick up the hash rate again by switching on their mining devices. And therefore, there's the age-old debate of which came first, the chicken or the egg, which came first, the hash rate increase or the price increase. They kind of work in unison. So if the hash rate is going to continue to go up, price usually will follow suit. In conclusion, these 6 critical on-chain metrics are pointing towards an exceptional risk-to-reward setup in Bitcoin. These indicators are at levels similar to those that have accurately marked the 2015, 2018, and 2020 bottoms. And here we are in 2023. And these things all work on a timing cycle. And that is what I mentioned to you guys. I know things are a little bit different this time because of what's going on macro, with the stock market being in a bear market, but potentially showing good signs as well at the moment. But should the cycles repeat, then 2023 should be when you expect the bottom to be set in, which is right around where we are now. So these are a lot of the types of posts that you're going to start to see. And I think confidence will build back into the market, and then there's a potential for a higher run. So what to do? I forgot to mention this yesterday. I wanted to, so I made a little note over here, how to buy parabolas, because I know a lot of people experience extreme FOMO. And when price starts to run away from you, you have no clue what to do, how to get your entry. You think, well, I'm buying the top. What am I going to do if I jump in now? I'm going to get wrecked. So this is essentially what you do for extreme conditions. This is not financial advice. I'm simply outlining in extreme conditions. You're so worried that price is going to run from 23 straight to $30,000 over the course of the next 10 to 15 days with absolutely no pullbacks, then this would essentially be the plan. You do need to exercise risk management and still at least have a stop loss. In theory, you would place a stop loss pretty much in between the last 4-day candle close and the two 4-day candles before, which is on the 13th of Jan. You would place your stop loss at the open and close in between those candles, which is currently coming in at 21,182. That doesn't mean that you can whack in everything that you've got, because if you enter at current levels and that pulled back, that means that you're risking 8.3% of your entire portfolio. So you obviously need to calculate, right? Typical trade or investment entry, you're willing to risk typically from 2 to 3%, depending on how aggressive you are. So that would mean 2% of 8% is 1/4. Take whatever it is that you wanted to enter. Technically speaking, you could enter that over here, the stop loss below, entering in 1/4 of your position size, and that would give you your entry opportunity. It's all about controlling your risk management. I would say if this candle were to reverse over here and start to come down below that level, then you can say that probably we're going to go for a deeper pullback, and then you might be able to look for those much lower levels around 19.5 to 20,000, which still from that stop loss is down another 6 or so percent. So keep that in mind. That is one strategy that you can use. I'm not saying that you should use it. It is risky, but if you are worried about price running away, that's one way to look at it. So very, very important is the stock market over here. You can see that it had a clear breakthrough, but I'll zoom into that in a moment. I first want to just show you the low levels, which is the VIX. And anytime that the VIX got this low and started to expand out of here, you typically have seen your sell-offs or your local highs and then follow through back to the downside. And that's kind of where current price action is now. So let's zoom in. Let's take a look over here at the price action. If you do take a look at this was a strong close. Your next target would be all the way up to the range high at 4,105.5. That's for the ES1 with an exclamation mark. That's your S&P 500 futures. But if you do have a look over here at what Gareth said, Gareth Soloway, he said a stock market warning. SPX and NASDAQ sharply higher, but the VIX volatility is not dropping. This tells the trading community that smart money is buying protection to be careful. This isn't to say that we can't go up for a few more days, but is a bigger signal of trouble that is looming. So what does that mean? That means that essentially, I guess, this could run much higher. This running higher means that Bitcoin could get parabolic. You've seen how quickly crypto can move. Crypto could quite easily move to that 25K zone in the next 2 days. And then if it does crack through that, possibly even get to the 28 to 30K zone within a week or two. So in line with what Gareth is saying over here, the stock market can continue to rally, but you might still have something like this play out. This chart that I just showed over here, where, and I said keep this in mind, you had a big deviation. You could have a big deviation as well to the upside, tag 30K and come all the way back down into the range, and then have a slow bleed possibly into those key levels that we had previously outlined, and then accumulate for the rest of the year. So you need to consider all different types of scenarios. The DXY, again, I'm going to keep mentioning at every show, and we'll see what happens when this level gets hit. 101.297. We're still on our way down. I also expect a reaction from the DXY. There it is. It's essentially coming in from that candle that happened on the 30th of May. This is going to be a key level where, at the very, very least, I'm not calling a reversal all the way up to all-time highs. I'm just saying that once this gets into here, expect a reaction. It might turn there. It might turn at the 108.6 level. That will provide the pullback that you've probably been hoping for crypto in order to bid into that higher low. Okay, The total two is starting to reclaim the mid-range over here. Let's zoom in for you a little bit more. So we did cover this yesterday. That's why altcoins are beginning to rally. Total 2 includes all altcoins with Ethereum. Total 3 is yet to break its downtrend line over here, but I anticipate that this would not be a problem if Bitcoin does continue to rally and it cracks through that 25K level. This, I would expect, it would then start to explode, because all those people that have made their profits in Bitcoin will start to rotate into altcoins, and all the sideline money who thinks that Bitcoin ran too quick will also look for altcoins as the next means of making profits and catching up onto their lost gains in Bitcoin. Okay. The Bitcoin 3-day chart inverted over here. You can see very, very simply put, this is your next level we are approaching at the moment, and that is your $24,000 region. Once price breaks through this, then you look to the next major support, which I said over here is your new level of support. This is a strong zone on an inverted chart, and that's going to come in at 32 to 28,000. So that's going to be the main level where you would, at that point, you want to have taken your profits. This is where we're definitely not going to, no such thing as definites in this market. So let me take that back, but it's unlikely that price is just going to break through that on the very first attempt. More than likely, if it does get there, it's first going to reject and then provide another opportunity and probably crack it on the next run. Okay, so that is that over there. Next, the Wyckoff accumulation phase is entering into phase D now, which is that markup phase where things start to get quite aggressive. And if you do remember, I did cover this in this video. This was 3 weeks ago. So this stream happened on the 27th of December, just before the new year. I said there's a potential that a Wyckoff accumulation phase could be playing out. So I thought, let's take a quick look at that. Okay, I have overlaid the Wyckoff accumulation chart. I'm going to make it clearer for you to see now. But from a transparent perspective, you can see we've gone through phase A over here, broken into phase D, which is kind of consolidative, using that $24,000 as a level of resistance, break back down, come all the way down, sweep down into phase C. Phase C is where the ultimate lows come into play, and that was the 15,500 level. And then you create a spring. The spring took longer than expected, which is why I wasn't sure this was going to play out, because this consolidated for quite some time. If you do look at the volume profile on the bottom over here, the volume profile was super high. That's what you expect to see in a spring phase. You have high volume and price consolidates sideways, recaptures back into the main range, which is 17,600. And now we enter into phase D, which is where we're currently at. So let's make this a little bit brighter for you, this graphic, so that you can see exactly what I'm looking at. So once you approach that $25,000 to $26,000 level, that resistance, which is coming in with all the moving averages, expect a consolidation there. If you start to see a consolidation like this, that is completing phase D, and then you lead into phase E, which is the final markup phase, which could lead to $30,000 Bitcoin. And if you do look, it's also for those of you who are new and you might not be familiar, just look up Bart Simpson's head. Turn him upside down. This is an inverted Bart Simpson as well, where you have a strong sell-off. You basically consolidate, and that's his hairline, and then you rip back to the upside. Often after a big move like that, you see the same thing, but in reverse. So you might see consolidation, and then a breakdown back to lower levels. So this is just a trading opportunity, is essentially what I'm saying. So let's quickly make that clear, and you can see where we're at. So you're looking for this phase over here. You can see the demand with the wick low again from May, this area where we rejected in August and we came back down, and now we're fast approaching that. I think that there's a good chance that we tag this level. The only part of this Wyckoff that I got completely wrong, and I'm willing to admit when I'm wrong, is I was looking for a deeper pullback from this. I haven't really drawn any of these chart levels based off of that show on the 27th of December. I was looking for a pullback from this zone, and it looked like it was going to happen all the way down to 19. I was hoping to gain my entry over there. I've obviously been forced to buy a little bit higher within these levels. And here you can see small consolidation, bull flag on a low time frame. And then you can expect probably it's going to be the same thing, consolidation and bull flag straight into that $25,000 zone. Now, once you get there, then that's obviously where you need to start to pay attention, because, of course, price can move through that level very, very quickly. So once you break that, you go into phase D, you consolidate above those zones, and let's hide this so you can see. Once you consolidate above the pink and above 25,000, you've now broken out of the primary range that price has been stuck within, and then you're going to target the order block, which initially led to the breakdown. This is the order block. Price came all the way down. We made the May lows at 25K, bounced back up quickly. We consolidated further between 29 and 30, and then we flipped all of this from support, breakdown. We flipped it into resistance, and that is your order block level. Those have a high probability of being retested. So that's what I'm watching over there. Keep a very, very keen and close eye on this, because so far it seems like it is playing out. Falling wedge breakout at 29 to 32K target. Okay, feel free to go look at Stock Money Lizards if you do want to look at the Wyckoff schematic that they've put in over here. It's pretty much the same thing that I just showed. But what about the bear moon? The bear moon could still potentially provide pullbacks, but I would still say that any pullback that does take place is an opportunity to buy the higher low. Any test into these moving averages, I think, are going to be bid up very, very quickly, and you're going to be left with a major, major wick. And I could be wrong. I will be on the bullish bias since we've broken high time frame structure until proven otherwise. On the next higher low, that is definitely an entry opportunity. All right. In other news on altcoins, I thought let's touch on some of the altcoins to show you where they are relative. And I'll show you the updated sections of the Discord. You have Wu Blockchain, who shows that Gains Network, a GMX-like on-chain derivatives protocol based on Polygon and Arbitrum, had a transaction volume of more than $1 billion last week with a fee of $690,000. Its token GNS once exceeded $4.7, both hitting record highs. So GNS is a token to watch. Gains Network is one of the sponsors on the show. Their token will naturally accrue value as the chain becomes more and more prominent. And I took a trade yesterday on Gains Network. It worked out pretty well. Interesting trade setup, the way that the DEXs work. I do recommend at least giving it a crack. Give it a try, see how it works, play around on it. There's a link in the description below. You may as well get familiar with it now, because I do think that is where the future is going, onto those decentralized exchanges. All right, so here we are. One more thing. I just want to touch on this one more time to give you some perspective. You can obviously see the main ranges here: range high, range low, mid-range. So in relation with what I just showed you on the Wyckoff schematic, you'd be looking for this. Break above that, small consolidation, and then you're going to go into phase E, which is the markup phase. So do keep an eye on that over there. He's here blowing kisses and putting his face like a fish against the window of our studio. It's highly distracting, Fred. All right, moving on over here. Ethereum. Let's touch on some of these. My aim of showing you these, I'm going to run through them very quick, is I want to show you the ones that are near their range lows. So that could be a potential opportunity for you. I'm not going to be able to spoon feed you on this one. You're going to have to come to your own determinations of how to gain an entry into these. But typically something that's coming into resistance, despite the Wyckoff having a probability of playing out to the upside, you probably don't want to be bidding something into resistance. Rather look for one of the ones that are at their mid-range or near their range low. So let's go on to some of these. Arweave. There we go. There's Arweave. And I'm literally just going to shoot through these so you can take a mental note or pause the video on the chart that I'm showing you over here. Okay, this is Uniswap. And they're all the same, guys. Range low, mid-range, and then the highlighted pink at the top is the range high. Okay, there we have Vulcan Forged. I'm going to go through all of them. Lido at range high. Matic. Okay, Matic I covered yesterday, so no need to cover it again. Filecoin. Filecoin doesn't look too bad. Somewhat interesting. It will be hard to create your invalidation, but it's going to basically be that swing low over there at $4.16. Phantom hitting into the range high. Looks like it's already starting to reject. Here you have Solana coming into the range low. This is the main range low, in my opinion. This one could get quite aggressive. Here you go. This one I'll quickly mention over here. If you start to see it consolidate like this, this could be the next little lower high like that, you might see something like that. And if it regains that, then you're targeting up to the mid-range. So do keep that in mind. Chainlink coming into the mid-range. Doge is already in its mid-range. Okay, this one's run hard. Optimism. Curve in the mid-range over there. Invalidation, pretty much below that zone. DYDX. Okay, big unlock coming. I don't know. It's already had its run. I was hoping for a sweep into that zone. I missed my entry. GMX pulling back slightly. GNS already in price discovery, broken above range high, might create a new range. We don't have enough information. Casper, not too much to look at there. Looks rare. Also, I would leave that. ENS is run. Manifold. Recapturing the range low, easy invalidation is below that candle on the daily. This one doesn't have as much price history, so go with caution over there, but still interesting nevertheless. Okay, I haven't done this one. Secret A0. Some of them I haven't charted yet. As you can see, there's a lot. Frax, Dopex. Let's move on. Okay, Dopex there is. Okay, Dopex is in wrapped ETH, so let's leave it. Energy Web Token. This one was an opportunity as well. Into the range low over there. Pretty much I would be viewing or have a stop loss. As you can see, I have a little alarm set just under the previous day's low. You don't really want to see price come back below that. Otherwise, it becomes an engulfing candle. Okay, the Luxo hitting range high. Rune was one that was interesting. I looked at it this morning. This could be an opportunity over here. If you look at Rune, simple trend line coming up over here. But first entry with a stop below that daily, which is coming in at $1.58. Just calculate your risk. Obviously, it's still a couple of percent away, but if it can hold that, potentially bounce off this zone and target up to the next level, which is coming in around $3. Okay, the graph also breaking back into its range, potential opportunity over there. Compound has reclaimed its range. Similar. You're looking at that zone over there, needs to hold and consolidate, and it might have another leg up. Okay, Sandbox. There you go, that's Sandbox. Okay, guys, I think I'm just going to do two more. I'm running out of time over here. This is Ultra. Ultra's regained. Let's go Immutable X. Last one, Immutable X. Regathering this range over here, I would say this would be the primary range. If it can hold above you and consolidate a bit longer, then you can start to target higher. So what does this all look like? Let me just grab my Discord. 1 second. Okay, going to the Discord over here. There's Kyle's trades. Here you go, Kyle's updates. And the new section is called Kyle's analysis. You can choose the coin. I'm slowly but surely working through all of them. They are all in there. If you want to get into the Discord, you need to sign up using one of the exchange links, deposit some money. It doesn't matter how much, just deposit whatever, $10, however much you have, $100, $1,000, whatever you want. Take one trade, and then you'll be able to send the user ID number through, and you'll be entered into that VIP Discord group where all the information is. Okay, looking very quickly at Bitcoin on the low time frames, here it is. I do believe that wick will hold. That's why the stop loss is below there. I did mention to you guys, expect possible consolidation within this level, and then a probable breakout back up to the $24,000-$25,000 region, $24,700 to $25,000. That is the zones that I'm watching. That's low time frame. So keeping that trade intact, that is pretty much the end. The longs continue to be highly leveraged against the shorts. Nothing has changed over there. The market can remain irrational longer than you can remain solvent, so don't fight it. I guess let's just stick with the trend. Trend is up, and therefore any dips are worth buying. That brings us to the end, guys. Thank you so much for your time. Very, very quick, abrupt stop. I apologize, but we have a big meeting that's coming up now this morning. Thank you so much for your time. I appreciate each and every one of you. Do not forget that we're doing the Rolex competition. I think Run gave one of the Rolexes away yesterday, but if the person didn't claim it within 5 hours of when he announced it on the show, then we redraw again. So there is still the BitGet one. Sign up to BitGet. The links are below. Everything is over here. Rolex giveaway, BitGet giveaway. The Discord is there. The daily candle, sign up to the daily candle. Everything is in the links below. And that is it. I will see you all on the next video. Have a blessed and wonderful day, and cheers for now.